Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Thursday, June 6, 2019. What I'll do is hit on just a lot of the trade ideas that we've been focused on recently, both the official and unofficial trade ideas. So I plan to go through just as always, a quick overview of the broad markets, hit on crude oil, coffee, wheat, treasury bonds, gold, a couple other things that I've mentioned recently as potential trade ideas, such as railroads. Hopefully I'll get to the lithium stocks and some other things here. All right, so it's a lot of stuff, so we'll go quick. Here's the chart of QQQ, 60-minute chart, pushing up against that 176.74 resistance level. Remember, we hit that yesterday, had a pullback. We powered back up. That was yesterday? Oh yeah, yesterday. Powered back down to the or recycled back down to that 174.92ish level, backfilled the gap, and then some. So we're pushing up on it again. I'm still leaning towards more upside. I posted some. In the trading room, some potential bearish, very small bearish wedge patterns on the futures. We'll get to those, but very small patterns probably play out for a small correction. I mean, the bigger picture is this: we're coming off this big divergent low right here, so not a whole lot of resistance up until about. I should add a line right here, and let me do that now before I forget. Right about here, about 178, and again, that was a big level on the daily chart on QQQ. Trying to zero that in. Well, close enough. There it is. So that's our next resistance level, and then we start to increase the odds that we're going to get a decent pullback, and may even possibly even a resumption of the downtrend that started here off the highs. So that's QQQ. So near term, still kind of sitting tight with the longs. SPY also was well above the 282.40ish level, coming up on the 284.16ish target. Remember, these are 60-minute targets, so we're already in the lower half, or maybe about 1/3 through the way of my uppermost bounce targets here. Actually, I should say no, quite a bit. Not uppermost, my bounce target zone. I'm sorry, guys. So 282.40 all the way up here to about 289 or so maximum bounce target. But from here, we're getting a little stretched in the near term. We did have some consolidation the other day that helped work off the overbought conditions, but you can see now, this is a 60-minute chart, we are hitting that coming up on that 70 level on the RSI. That doesn't have to stop a rally, and in fact, in a bull trend, it usually doesn't. You usually become more oversold, as you can see right here, going above that red line, or more overbought. I'm sorry, more overbought, or stay overbought for an extended period of time. And even though we had little pullbacks, we stayed up around that level. So this is the nature of a uptrend, that you stay overbought, or you exceed that overbought level. During a downtrend, you tend to stay oversold, or to hug around that oversold level. It can become more oversold. It's just like a bull trend in reverse. And so now, which one is this? Well, let's say this. I still believe most likely there's another leg coming down, so you got to be careful. Usually when during a downtrend or bearish trend, and again, we're just playing around with the 60-minute chart here. Well, the daily charts we're not going to be oversold yet, or overbought yet. But what happens is you tend, overbought readings are usually very fleeting. You get usually a one and done when you're in a downtrend, and then a resumption of the downtrend. Same thing happens during an uptrend. We don't see it here on this chart, but you go to the left. When you hit oversold, it's usually a quick one and done. It's a good buying op before the road to the next the next rally up. And just jump back to QQQ 60-minute. QQQ hasn't even hit the overbought readings. This whole correction has been about tech and the FANG stocks, and so they've been pressuring the markets. So we were looking at SPY a second ago. So we're not even overbought yet on QQQ. And so if we get to that 178 level, we'll probably be close to it. And if we head on up to that next target there, but 178, again, let's just loop over to the daily charts. Pretty big level. Remember, that was an important level before, very important support level on the daily. So there's a level I can tell you, if we hit it today, I will most likely be closing longs out. And whether or not I reverse it, any of those positions to shorts, doesn't matter. I may or may not, but I can tell you I'd rather be, if we hit it today, again, because of the near-term overbought readings. And my thought process is this. when I often say this, it's usually the initial tag of resistance from above, meaning we haven't hit it in a while, so this would be the first tag in a while on a rally. The initial tag of resistance usually results in a reaction, so that's what I'd be looking at there, again, if we get there today. And we may not. Let's look at the futures real quick, some patterns I pointed out in the trading room. Alright, this is a 60-minute chart of NQ, the NASDAQ 100 futures, and you can see what we formed. Remember, bigger picture, I've zoomed in too much here. We had those big divergences, the break above the downtrend lines, that's bullish. But very near term, this is again short-term charts, small patterns. You have this divergence, these little wedge type patterns here. And you had a breakdown so far, and we're coming up on a back test of it. So that's something to keep in mind. Now, if we back test a little higher, and that's what I favor, we come up to this 72, 72-ish target because we reversed so far just shy of it. You can see right here, just shy of that level, and that was it has been a target that I've had on NQ for a while. So let's just say, and these are micro calls, guys. Please keep in mind micro calls get a lot harder to make, the very near-term zigs and zags, but that's what I'm looking at now. So a little more upside there to that level. If we can pop it, then you have next stop here is about 73.72 on NQ, and that's certainly possible. So let's just keep an eye on that, and we can also extend these divergences, by the way, if NQ were to rally. But we also have to respect that they may play out. Maybe we reverse off this back test, or we go a little higher in back test to hit that level and then reverse. So that also might be a level there, and it may coincide with that QQQ level. I'll have to check the charts that I showed you a minute ago. What was it? 178. Not sure if that comes in exactly where 178 does or not, but yeah, either way, that's and it probably does. Yeah, come to think of it. Here, hold on, let me measure that out. Not exactly. I just measured it out. I get about 0.4% on the futures and about 0.8% on QQQ. So either way, call it about 0.5% or so more upside, and then probably be looking at a pullback. And again, it could be a minor pullback with another thrust up to those next levels, or that could be it. So all I can tell you is I can't make any guarantees to this, but if this is if this right here is a bear market rally, just like this one, or this was just this was a counter trend rally, going off my larger thesis that this is we're in a bear market, and then if this is a bear market rally, you'd expect it to get sold into pretty early, and with another leg coming down now, and I can tell you the next leg will probably be pretty powerful and has the potential to take us down about another looks like about 9% or so until any major reaction here in the market. What as I like to do, I'll tell you where I think things might be headed, and you can probably gauge from just what I'm saying today. My degree of confidence in the near term isn't very high, so I wouldn't be, what you do with that, you just don't trade heavy. You lighten up on your positions or go to cash until you have, at least that's how I trade, until I have a higher degree of confidence on where we're going. But for the bull case here, we hit a pretty deeply oversold reading. We were oversold right here the last time, or close to it, and we had a decent bounce. This time we became even more oversold. So just go back in time. If you are a believer that this bull market and the economy has a lot more room to run in 2019 and possibly beyond, then you want to be buying aggressively, I would think, because this is the last time we were this oversold on the RSI was right here, and that proved to be one of the best buying ops in years. But during a corrective phase or bear market, look, we became very oversold back here, and it led to about a comparable rally, maybe a little stronger that time around right there. You can see it. Didn't do it well here, arrow tool. But what happened is if you bought that, you felt a lot of pain. You probably got stopped out, and if you didn't, you had a lot of pain. So as I always say, very simple. If this is confusing, oversold and overbought readings in themselves are not buy and sell signals. They're merely an indication that a trend reversal is likely. And what you want to do is align it with other technicals and everything else. So back then, I could make a much stronger case for a bounce, and I did. At this point in time, I can only make a decent case for a relatively small bounce and then a resumption of the downtrend. So therefore, I am treating this one like this one right here, not this one, if that makes sense. Okay, loop back to the 60-minute futures. Here's the ES, and again, bigger picture. I know there's always new people coming to the site. That's why, go over the same things I've been covering. There's a downtrend, big price channel on ES, the S&P 500 futures. There's your divergent low. That's positive or bullish divergence. That was a catalyst for this rally here so far. Nice rally it has been. And now it's set up in this very small bearish rising wedge pattern, which just broke down today. And now we're back testing. So there it is. We're back testing, but here's the thing. We fell a little shy of my 28.40.75 target, and it's a pretty good level. So I showed you a minute ago on NQ we were just shy of my target as well. Doesn't mean we have to hit it, but from my experience, when I have a well-watched, well-defined level like that, it's like a magnet or a black hole, if you will. You get close enough to it, gravity's going to pull you in, or the magnetic field's going to pull you in. And in this case, I think that we'll continue to work our way up here, back test this, hit that level, and then get a reaction. So you can see there's very little meat on the bone in the short term here today before a pullback, I think. But we can power through there, and I often say this: fewer things are more bullish than a failed breakdown, a bearish chart pattern. So if this breakdown doesn't materialize and you had shorts that jumped in and were waiting to short the market, and let's say they shorted the break of this pattern and we pop that 28.41-ish level, that's probably going to take us up here to the next next target, about 28.64. Again, I'll probably almost certainly lighten up short exposure or long exposure, but I'll also treat each trade individually. I'm talking index longs, NQ. I'm not trading ES, but NQ. That's where I'll probably take either do one of two things: just book full profits or trail stops up. And again, I'm showing you ES, but that means you hit that level, set a stop just a little bit below, and if the trade continues to pan out, you just continue to trail your stops up along the way. That way, if you get a sudden reversal, especially if it happens overnight, well, that'll help you in the futures. It's not really going to help you on SPY because you can gap down, but that's a strategy of if you're not very confident on a reversal, if you think there's more upside, instead of just selling at the level you think is going to stop that rally, you just let it run, set your stops below, and then trail them up and let your winners ride. Okay, let's talk trade ideas too. But well, the market, of course, you can be trading. Right now, I don't have an official trade, long or short, on the markets because of the, the fact I'm viewing this as just a pretty much a counter trend bounce within a longer term trend, and we may go back short QQQ or something similar soon. But let's look at coffee for a second. This is KC. I posted this chart and update today. KCR Coffee Futures, and story on that, if you're new to the site or didn't catch this trade earlier, we had a nice divergent low here on the 60-minute chart. That was a catalyst and a nice wedge break. We had a long entry, and we hit, I think, well, I'll get to Joe in a second. What was it, our second target we just hit? The same time we hit that target on Joe, we hit, and I posted this the other day, 2 days ago, on the charts I'm watching, and I covered my thoughts in a video before that, that this was a level where a reaction was likely. Why? Number one, overbought. This is extreme overbought. Overbought is 70 or higher on the RSI. I don't have a line on 70, but you can see here 60 and 80. This thing went to about 90. That's extremely overbought. As I said, overbought in itself isn't a sell signal, because if it was, that's 70, that's when we hit overbought. We became more overbought. But extreme overbought is pretty much a sell signal or close to it, or at least a heads up. You're going to get a correction. You have to reset the overbought conditions. Add that in with a divergent high, negative divergence, which was pointed out then, and significant resistance. That's all the ingredients for a correction. And because we were very overbought, like I often talk about on the stock market, the more you stretch that rubber band, the more it's going to snap back. We had a pretty sharp correction, but we fell right here. And here's a level I added recently. It's about 98.37. You can see the reactions from above and below. So that is certainly a pullback to support. And as I mentioned, I still like the longer term outlook for coffee. If we have another jog down, favoring a reversal here, but we could certainly come back and test. This is pretty solid support here, about 95.9528 or so on KC. That's coffee futures. So favoring a rally from here, go and take out that previous high and continue up. PPO is very solidly in bullish territory. I use the zero line. That's right here in the middle where you see that histogram. That's a zero line. That's a great trend indicator. When the PPO 9 EMA, which on these two lines here, it's the orange line. When that is above the zero line, the trend is bullish. And when it's below, it's bearish. So all this was bearish. This, you might be saying, well, looks like it chopped through. Yes, I always say this. Stay away from using trend indicators, MAs, moving averages, PPO, anything during a sideways trading range. You will get chopped to pieces. They're ineffective. When you get a trending market, that's when this works. So you can see all that time it said stay out or stay short of coffee. When it crossed bullish, it says now the trend is bullish, and right now it's clearly bullish and plenty of room. Here's again, I use the 9 EMA because it is the last of the two to cross and helps filter out whipsaw signals. So you can see this is the PPO line. Even that may turn up here at the zero line. That's even more bullish. So that's coffee, and there's my thoughts on coffee. So continued. If we happen to take another jog down, it doesn't really damage the longer term outlook, but although this right now is my preferred scenario. Okay, and another one is wheat. Oh, before we get to wheat, I promised you to look at Joe. I know a lot of you guys trade, don't have futures. I understand that, and that's why official trade ideas on the site are always ETFs, ETNs, or individual stocks. So there's Joe. This is the coffee ETN, and the one that we're using is a trading proxy. It's just a beautiful wedge pattern, just clean downtrend line, strong divergences. I posted a chart, also coffee falling to long-term, breaking out on the long-term charts as well, and so that's what you got. And we had a pullback right to that T1 level. Remember, my actual levels are set on long trades are a little below. This is the line right here, so we pretty much pulled back to that line, and so far moving up. So that's what I expect, something like this, a continued move up to from this point to that T3 third target around $39. So there's Joe. And then the other one was wheat. We closed wheat out recently, and I almost added it back on this morning. In fact, I had a chart I did, and I meant to post that as an update along with that Joe update on coffee that I posted this morning on the site with static charts. Wheat pulled back to the second target. We hit our third target, nailed that, got out, closed the trade because that was a final target, and now we pulled back to the previous second target, which these were resistance levels on the way up, and they should now act as support. So I think wheat probably has another run in it. And in fact, I did a chart this morning. Let me get to that, and that's the one I meant to right here. These are wheat futures. This is really what the wheat ETN is tracking. And I did the same update the other day, 2 days ago on Joe, and I told you wheat was at very same story, significant support. You can see all the reactions back here. That was a big, important support shelf. Why? Well, not only were prices dancing on it, but when it broke, this tells you that's technically significant, that we didn't just limp down and go back up and limp down again. We had a waterfall sell-off. That says that was a very significant support level. It was broken. There was a waterfall sell-off and a big move down in wheat, and we came back to it finally. So we had a reaction there the first time, pull back, and we pushed up, made a marginal new high, but only popped barely above it, and we pulled back again. So this is the scenario I wanted to lay out. This is a very good support. It was a target on the way up, and it's support 484.33, an objective long entry. And I think since we've already had two tests of that level, I think third time will be a charm, and we'll break it and continue up. So that was this morning, and let's look at where it is now. There it is. Started to move off that level. And I always say this too. If 484 is support and you're trying to buy a pullback, you don't wait to buy 484. Buyers are going to see it and step in early. Just like I always close my positions before the actual resistance level that I expect to pull back. I'll adjust it down so I don't miss a fill. Same story when you're buying a pullback to support. That's why I had that line going up there. So far so good. Nice little lift here. You can see so far since this morning in wheat. And longer term, plenty of room left if the longer term charts play out as I think. So this one may be added back as an official trade soon. Crude oil. Crude oil was, we came pretty close to nailing the top. We had a short on crude. We certainly didn't milk all of it, but we hit our final target, and that's fine. I've said this before in the trading room several times and probably in videos. Crude is what I call a trendy little sucker. What I mean by that, well, when it picks a direction, it can go and go and go. It likes these trends. So the fact it's fallen this much should be no surprise. It doesn't always have such big moves, but even the little trends are pretty unidirectional, in other words. So, you get a rip. It's not a lot of, it can be in a sideways trading range at times, but it's just a great vehicle to trade. So where am I going with this? Well, all right. So the case for that last short was based on largely on this big rising wedge here on the daily. Yeah, just like we had a divergent high back here, just like we had a divergent low here, which was bullish. We had a divergent high right there and a wedge. There was your sell signal. Traded around sideways for just a couple weeks and then melted down. Well, we've come full circle. This is a pretty decent support level around 1081. Yeah, we're a little bit below it, but yes, that is only to be expected. I call that a momentum fueled overshoot. When you have a lot of velocity, downward velocity, it's in free fall, you will, on any security, you will tend to overshoot a support level, even if that is the level that's going to hold. The analogy I always use is like a pitcher throwing a fastball in the major leagues. That thing's going over 90 miles an hour. The catcher hits the catcher's glove, it's going to snap back, and then his glove's going to come back forward to the point where the ball hit. That's what happens on momentum fueled overshoots, because you have that downward velocity coming in there, and it works in both ways to the upside as well. You can see I had, my resistance here was 1355. We overshot it by a hair and then reversed. So oversold as well on crude. So crude is looking good. Unless the market melts down, because it has a high correlation with the stock market, or has for a while. There's bullish divergence on the 60-minute chart. Let me find our recent trade. Here was our recent trade. We hit T3 here, and it floundered around and kept going. So back to the one I just showed you. Here is positive divergence on the 60-minute time frame right there. RSI, PPO divergence right here. That would be, here's your divergent line. And there's also a very steep downtrend line price channel. So this one looks good. I might even add it on as an official trade. It's certainly a counter trend trade, but then again, that's never stopped me. You guys know that. Let's look at CL for you futures traders. This is it I posted this morning. Same thing. You have this divergence walking its way down. CL, which are crude futures right here. There's your downtrend line, wedge type pattern, positive divergence. The only thing lacking right now is a buy signal. And that buy signal would come either on a break of this trend line, or if we get some type of bullish reversal candlestick pattern. And if you want, you can also, it's very objective, you can take a shot at support here on the daily. You're just going to have to use pretty wide stops. I would say at this point, you're probably safe just below the recent lows. That's not that bad. That gives you a nice risk reward because you're looking at a downside of about roughly 1.5% if you get stopped out, and upside target would be here about 1154. That's about 8.25%. Very nice risk reward ratio. So and there's also a gap right there on USO. There's right there. You can see that gap and support. So I like USO here. This one may make it on as an official trade idea here soon. And as I always say, official on a trade. Official, unofficial. If I didn't like it, I wouldn't point it out. I try to keep the official trade ideas of those that I have the highest degree of confidence in, but there's just not enough hours in the day. I do these videos, I analyze charts, I answer questions in the trading room chart requests, and I can't always mock up the charts. It's quite a bit of work to do the official trades, to list all the price targets, stops, compose the posts with all the notes, because official trades always have follow-ups. There's a trade setup or entry, follow-ups every time a price target's hit, follow-ups when that trade stopped out, and then sometimes just updates like I did on the JO today. All right, that's crude for you. Gold continues to look good. Still most likely will be added as an official trade. Now, I've harped on this one for so many weeks now. both on daily and weekly time frames, highlighting objective levels to pull back, reiterating my longer-term bullish case on and outlook on gold, and also my scenario, which has a breakout here, this big symmetrical triangle pattern. This is a weekly chart, by the way, and a move up here to 130, and then a consolidation, then a bigger move up there to about 151. So that's my longer-term outlook. It's playing out well. The thing that's been giving me pause, but it's looking much better now. USD, Euro USD. That's the Euro US dollar pair. I mentioned for months. I mean, going back into last year, following this bullish falling wedge pattern here on the daily chart. Again, if it's confusing, I'm talking about this downtrend line here and this alternative. I have two downtrend lines coming in together, both of which were broken. And then I said you have 113.056 resistance just above. We hit it yesterday. We hit it again today, pulled back. Tap, tap, tap. You tap enough times, it's gonna get taken out. And I said we'd probably hit it, have a pullback here to back test the trend line, which we've now done. So I can tell you this: gold it has been looking good, looks even better now, and it'll look better when this level's taken out, which I think it will be soon. By all means, this chart looks constructive. What this means, this is a top in the dollar. The euro is by far the largest component of the dollar index. I think it's a 56 or 60, almost a 60% weighting, give or take. And so all you have to do is follow this pair to know where the U.S. dollar index is going. Or you can certainly use UUP, for example. That's an ETF. An ETF that tracks the dollar index. And you can see here, this is the same story in reverse. If you have a bullish falling wedge on the euro, you're going to have a bearish rising wedge on the US dollar. And that's what you have here, and it's starting to crack. See these there's a little brief whipsaw there, another one there. So if you want to be safe and give it the benefit, this is what I call the BOD, benefit of the doubt trend line. You move that line down, now it captures that reaction in today's low. So again, the dollar's on the verge of a breakdown, but we can't say definitively that it's happened yet. So I'm just being a little hesitant on gold, but like I've said, I think it makes sense in a longer term portfolio and or a trading account, especially as a hedge to equities and things like that. Here's LIT. I mentioned that as a recent unofficial trade idea. I may add that on, but we'll see. This is the lithium ETF. Global X Lithium ETF. Nice divergent low right there, coming off the divergent low so far. And I could add a couple near-term targets, but I think ultimately this one can work its way up here to about the 27.55 level and or that downtrend line, barring a major meltdown, which is certainly a possibility, a major meltdown in the equity markets. Because what happens when you hit if we are in the next leg down of a bear market, if that's a big if still, it's probably going to be a much more powerful wave down than that we saw in the fourth quarter last year, and we're probably going a lot lower than that. And where I'm going with this is, you've heard the expression, the baby gets thrown out with the bathwater. In a broad-based sell-off, it's liquidation. Longs are getting liquidated. People are scared. They sell everything, even things with good fundamentals and even things with good technical chart patterns. So we can navigate that. If you don't like shorting, I'll look at, we'll revisit treasury bonds, gold, the commodities we're trading now like corn and wheat. And corn's not an official trade idea. I already mentioned it runs right along with wheat. They practically move together, so it'd be a tremendous amount of overlap. But those kind of things are where you can make money when stocks are falling, and that's been the case lately. All right, so that's lit. Just wanted to share that. And then what else did the railroads. I do want to show you a few of the railroads, like CNI. I mentioned these as potential shorting ops recently. CNI is Canadian National Railway. Pointed out a couple things on this chart that stood out to me. Is we had number one, we had a breakout to new highs, which at the time I said I believed it would be a failed breakout, aka bull trap. Here's the previous highs, and we did break out. That was a key support level, that 91.80-ish level. That was the breakout point, and we failed it. And now I'm doing this video at this point in time. Although I didn't add it as an official short trade, it came in and almost hit my first target. Well, actually, I would have had my first target set above that actual support level, so effectively it did. But it's now bounced back to that 91.80, and that offers an objective short entry for the next leg down. So CNI may be an official trade soon. I had UNP. I did a whole video. I think I covered these, or maybe it was, yeah, it was a video. And back tested here. Same story. Breakdown, break of that 171.67 support, and a back test. That is, you have several objective short entries in this chart right here. You have a objective short entry on the breakdown of the pattern, but I believe at the time I said you have to watch it because these are support levels, and that's one reason I didn't short it then. So you held support, but then when you broke, boom, that's sell signal number 2 right there when you break support. And now your third objective entry right here is a kickback to that 171.67 support for a move down to at least this 159.90 level. So divergent high, everything else I like to see, just like we had a divergent high back here, and that was good for a 23% drop in that stock. That's about it. I could go through these all day long. Some railroads actually look better than others. There's CSX. It popped a little bit above that level, but it'll probably give it up soon, I imagine. And again, I think there's more downside to come in these guys. Okay, I could go on and on. I have a sheet a mile long of trade ideas. Let's just stop here, and anything else that stands out, I'll put it on. Still keeping the new official trade ideas light because what the market's doing. I think this bounce is very close to running its course. It could have run its course today. I'm looking probably for a little more upside, as I said earlier, but when my convictions are a little stronger, I'll start adding back trade ideas long and short. But as of now, here they are. These are some things I'm looking at. If you like them, take them. And if you don't, if you're not sure, just pass. And we'll wait for the next, something that really looks compelling. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.